Hey there, it's Trisha, and I wanted to go over Monday because it was a good range day trade. And so I got a lot of emails about range trades, so I thought that I would just go ahead and point some out for hopefully the purpose of helping people recognize those. And if you'd like more information on the setups, you can go to www.easyemintrade.com. And a range trade is just that. It's something that you can do on a day where you're just kind of going sideways with no real direction. Yes, there were a couple other setups that somebody could have taken. One was during lunch, but you can see here by looking at Monday, this is the 3,000 tick chart on the NQ, that is pretty much sideways. So this is how you can trade that. I'm picking the afternoon. There were some in the morning as well, but just doing the afternoon because they're all right here, and it was definitely very easy to see where support and resistance were. So here is the counter channel. You can see it here. And we have resistance and support. Just above us is resistance, just below us is support. And so there are a couple ways you can do it. There are aggressive traders who, when they get to resistance and price trades to the upper channel, will just go short, expecting to get back down to the lower channel. Someone conservative would wait for the stochastic to roll over below 80 before going short. So either of those work. Somebody being aggressive will get their target very quickly because it's is very likely that you'll always at least get to your middle line if it decides not to continue down to support. But that will be up to you which way that you would like to do that. Also, you'll notice that when you're in a range, your ADX is going to pretty much just kind of be going sideways. Yes, here it is above 20, but it's not really going anywhere. So, totally up to you if you would want to wait until it got below 20 and take it. But, all day long it was just back and forth, back and forth. So even though the ADX is a little on the high side here, I would definitely feel comfortable in taking this. So here you get to support and you're holding the lower channel. Someone aggressive is buying as soon as it gets to the lower channel and support. Somebody conservative is taking it here when it crosses above 20, right here. And it works out. They get 2 points up to the middle line. Never gets up to the upper channel, but they made their target. You're not looking for a lot when you're doing this. You're looking for just a couple points on the NQ. Ideally, you're looking to get to the opposite channel or up to the area of resistance, and sometimes you get there and sometimes you don't. On the way down, there was nothing to do here because it never touched the upper channel and never actually got back up to the resistance area. Here you get to support and back inside the channel, and I don't know why I didn't mark that one, sorry about that, and works out fine. You actually would have gotten your target over here if you're shooting for 2. Otherwise you can just hang on until it touches the upper channel again. Totally up to you. Aggressive, you're in once it's touches the lower channel and you're staying inside. Conservative, you're waiting for your stochastic to be going above 20. Again, for you to decide what's best for you. Also would like to point out that you don't want to take these when the channels are very narrow. You want to have room to be profitable. So the channel was very wide on Monday, so plenty of room to take these. And also the thing about range trades is sometimes they take a little while to work out. They just kind of get hung up on that middle line sometimes and then continue. So up to you how long you're going to hold it. I typically am just shooting for a target, taking a profit, and getting out, all in and all out. Because if it does decide to finally pick a direction and break the range, then you can always take the other setup, the continuation setup. And here is I always love to see this when I'm taking range trades. I love to see divergence in the direction that I'm taking it. So for example here, you have a higher high here than here, while here you have a lower high here than here, and so you actually would feel confident that the price would move lower with that divergence to the downside. Somebody aggressive was already short here and got a target here already, and somebody conservative also could have taken it under one of these bars here once it crossed below 80 and never would have traded to your entry price, so you'd still be sitting there waiting for an opportunity, and this definitely is what you love to see, divergence. The next one here, you have divergence as well. You have a higher high here than here, lower high here than here, so you'd expect price to pull back. So on those, typically once it gets back inside the channel, I will be a little more aggressive, but for me personally, I'm typically, if I don't have divergence, I'm waiting for my stochastic to roll over, but there are plenty of people in the room who are aggressive and take those aggressive entries. And here you do have a lower low here than here, and a higher low here than here, so you would expect price to bounce. The issue that I would have with that, and was not interested in taking that, is because of the time of day. It's 3:14 in the afternoon, and we know that usually the market can tend to get a little bit whippy. So for me personally, for my trading plan, I don't take them at that time of the day, because I definitely don't count on the fact that it's going to do what you expect it to. So I hope that helps. And if you have any questions, you can shoot me an email. And if you want more information on the setups, www.easyemintrade.com. Have a good day.